Hello, friends. I hope you guys are well. Happy Sunday. Let's try this again. Let's see if Instagram can tap us in and give us the signal that we are on. All right. It seems now that it has worked. All right. We'll give it a couple more seconds to let Instagram let you guys know that we're here. Let your friends know that we are on and we are live. We have an easier kind of macroeconomic week coming ahead of us, depending on what Trump decides to do. But last week we obviously had a lot of news, and a lot of the news that came out as we expected, and then hit the markets with a little bit of surprise, which I was surprised that the market was so surprised by the news. But basically, as we've been saying, the labor market seemed to be slowing down. And that's what the evidence showed us with the job market's revision. And that obviously hit markets hard because everyone has been saying that the labor market is strong and strong and strong. But in the beige book, we did see that there were areas of the market where it seemed that unemployment was starting, or jobs were not being created as quickly. And if you guys remember a couple weeks back, when we did the interview with Shanze, Trading with Zay, I did mention how important the beige book is because it does help highlight some areas of strength and weakness in different regions of the economy. So let's see if Instagram will get us going. They like to always wait like 10 minutes on these lives to tell people that we're actually on. So last week, as you guys all saw, we had a bunch of earnings that came out. Obviously, Microsoft and Meta did really well. Meta held their move, but Microsoft could not. They are still in an upward trajectory, but they did give a lot of those gains back. And then Amazon, which we did talk about last week, and I said Amazon has a lot of difficulty hitting those targets. And so you have to be really careful when trading Amazon from highs, to be very cautious about the positions that you're holding. And the reason is because just Amazon has a history of getting a lot of power into a move. But then once it kind of hits those resistance areas, it really struggles to keep up its momentum. And that's just kind of the trajectory of how Amazon trades. Apple, I mentioned twice that it was coming up to a key resistance. It had double topped in that area and rejected. And many people were expecting positive moves from Apple, but the chart just looked like it needs to come down to a much more significant level in order to bring in new buyers. I think at this point, the thing that Apple has to demonstrate is that it can reach not only its previous highs, but that it can push beyond them. I think that Microsoft and Meta have done a really good job over the last year of continuing to develop a narrative that allows people to believe in the potential for the stock to continue to give, not maybe multiples, but to give significant gains. And so, of course, people are willing to pay for a stock that's going to give them a 20, 30, 40, 50% move. It is difficult to lean into something that looks like it is at its kind of all-time highs and isn't really going to push any higher. I think Apple really struggles to get that conversation going with its audience. So I think that I've been saying with Apple for a long time that I don't think, like, as a company, it's not a bad company. If I was going to be buying shares to hold long term, I could, justify buying shares here. But just for trading, I think that there are a lot of stocks that are giving you literally 100% return week or weeks over weeks. So, if you're going to be actively trading, then, you have to consider what is the move that's coming, what is the potential to get those squeezes. So, Meta, we had our target at 750. We obviously hit that, and then we stayed. With Microsoft, we actually had our target at 530. So we actually had long and short calls at the 530. So we made money as it moved past us, and then we made money again as it came down into our short positions. So Microsoft did really well for us. Something that I talked about in our Discord, and this is something though, you can do your own research on, but when you're looking at a stock and you want to see if a move is going to hold, what you want to see is that there is over a long-term bias, that there is open interest building up the chain. So you don't want to be buying to open a position at, let's say, on Meta at 750, and you don't see any open interest above that level further out in time. It means that people might have a very short-term projection of where Meta is going, but then they don't have a long-term vision. Now, I did say in our group that Meta has very consistent open interest going out into the next year. So you can see that people are very bullish on Meta, that they have that they're trying to compound their positions, whereas something like an Apple doesn't have that. It does have a lot of congestion around the 250 and the 260, but those positions have literally been there since a year ago. So those are like leap positions that are just basically bleeding out, and people have probably just down so much on those positions, they've just left them there, or it's institutional hedging. So maybe those are short positions that are hedging thousands of shares that they have held forever. That I can't speak to, but I can tell you that there's no new positioning coming into Apple. Any kind of call flows or put flows that you see for Apple, those are very, very short duration. And that's just going to give you a lot of whiplashing and choppy action. It's not going to give you a consistent move back into all-time highs. Not like what we saw with Google or Amazon or Meta or Microsoft. Those just had so much gamma over months and years of time, kind of building up into those all-time high areas. So this coming week, we don't have a lot by way of the macroeconomic news. So, I mean, generally, August tends to be a heavier month. July tends to be the really positive month. And then August tends to be a bit more choppy, where September tends to be the weakest month of the year. So, you want to have some of your hedges on. You want to be taking profits when you're in the green and not leaving positions on too long. You do want to be careful about becoming overly bearish, because whenever you see sentiment change really fast, usually there's also sector rotation going on. Right now, I mean, the last week, basically every sector was red, very little growth. And even in each of the sectors, the subsectors that have growth are not sectors that have a significant amount of those large cap companies. So you have areas like trucking that did really well, things like solar equipment did really well, but most of those companies are not companies that have a lot of liquidity. So if you were trading them with options, you may find that the bid-ask spread is really wide and that you're not really able to catch those nice even flows to those different levels. So I think a lot of stocks, you'll see they broke their trend line for the last, weeks. We've been talking about things like Affirm and PayPal and UPST. I mean, just all the stocks were in really nice, even uptrends, all the semiconductors. And those just, those have started to now test those trend lines. Some have broken their trend lines. Some had multiple trend lines. So if you look just over the last couple months, they had a really nice trend line. And if you zoom out to the weekly chart, they still had an upward trend line that just wasn't so vertical. And so, a lot of stocks are testing that second trend line. You do want to be careful. VIX was extremely depressed for just a very long time. And usually when you get those levels, you do start to see some kind of popping in the VIX. And we obviously saw that going into Thursday and Friday. One of the unique things that we've started to see is that usually what happens is that, something will come out and cause the VIX to kind of scale up. But then throughout the day, some of those hedges will start to come off, either because the puts are already in profit and people want to take profits, or because whatever was making them nervous just isn't making them as nervous. And so some of those hedges roll off. And so you can start to see like the VIX have a nice move up, and then it starts to even out. But this week on Thursday and Friday, something that was very unique to the trading activity is that the market maker move was accelerating into every single close. So, which essentially means that the broker was like still expecting a bigger move than what was baked into the implied move, but all the way into the close, which is extremely abnormal. I don't think I've really ever seen that in my trading, active trading history. And so I was very surprised by it. I have to say that on Thursday, I was a little bit caught off guard by it. And so sadly, one of our kind of regular positions that we put on, as you notice, probably in my stories, I post a number of trades. We have about 5 trades that we can put on every single day. All 5 of them don't always show up. 3 of them usually always show up, and then 2 of them are kind of hit and miss. Sometimes the price action just isn't giving us the kind of price movement that we're looking for, so the systematic trade doesn't get triggered. But we have one systematic trade that we take every single day. Those who came to the webinar, you know about it, and you often see me post our wins with our iron butterflies. And on Thursday, we were totally caught off guard. So there was a moment where our iron butterflies were profitable, and then price dropped really quickly away from us. And then we had to start managing the trade, and it was a loss for us. And one of the things that, when I was talking in the group, I said, the market dynamics that all the rules that we follow, we were following them, and the trade still went against us. And okay, we've had like 42 days of consistent wins, so you can't really, complain when you have one loss, but still it is like a little bit surprising when you see that the market is demonstrating something that you have never seen before. And part of it's because obviously with the Trump dynamic, there's constantly something new happening. And the market is not able sometimes to digest the news fast enough. So even into these closes, we're actually seeing volatility expand, which is very odd because normally into the close of the day, you start to see volatility contract because the market is closing. So those 0 DT trades should be coming to a close, but actually people are even aggressively trading into the last 15 minutes of the day, which shows that, that there are a lot of people who are finding themselves caught off guard, and either they're expecting squeezes that don't happen, or they're expecting further downside when that doesn't happen. So you do want to be really careful. I mean, it's, if you look back at the last day of June and the first day of July, the price action was actually super calm because of all of those end of month rebalancing. Actually, the market moved almost not at all. There were almost 2 flat days. And this kind of the end of July into the 1st of August was not so. So the Thursday and Friday price activity was actually really, full on and very bearish. Now, if you look back on the weekly chart, you will notice that there was a massive imbalance in the weekly chart between the last couple weeks candles. And usually on the weekly chart, you just don't see that. Usually you see that the candles give you at least the wicks start to be overlapping and they don't leave behind a lot of fair value gaps. But actually in the last couple weeks, we did see that, and there was a gap that was sitting there open. And one of the members in our group was like, these things always get filled. So, be cautious. And they were right. It got filled literally on the, at the end of the week. So, and we barely got a downside wick on the weekly candle, which is also kind of abnormal because usually SPX doesn't like to leave behind flat body candles. So normally in its price discovery, you see wicks on the top and the bottom side. Now, we do have a downside wick, but it's like super duper tiny. But it just shows the intensity of the selling action into all the way through the end of the week. So, going into next week, do I continue to expect some downside? This is August. August is seasonally not the most bearish month, but it tends to be choppy. So you do want to be careful. I know a lot of people who do not trade in August because that's like just statistically, that's when they take their biggest losses. And it's because the market doesn't follow through with a lot of their positioning. So when they expect bullish moves, it's just choppy. When they expect bearish moves, it's also just choppy. So they don't get that kind of like long thrust. And the reality is, we've had 3 months of really nice climbing action, like just in every sector. You have really beautiful trend lines, except for energy. The energy stocks are just like going sideways. They've not been doing well, but except for like Duke Energy, there are a few that have done well, more in the piping sector than in the more like exploration and oil and gas areas. Those have been like have one-offs, but unless you know the sector really well, I think a lot of people probably haven't been making any money in energy. Most sectors have had this like beautiful trend line, and now they're starting to give back some of their gains. Now, the reality is that sectors like commodities, whether it's gold, silver, those have started to kind of come off a bit. But depending on what happens with the US dollar, we could see a lot like continuing downside in the commodities. So you do want to be careful that you are taking profits. A sector that has like outperformed until now has been the uranium stocks and the nuclear facing stocks like Oklo, like NuScale, SMR. So, and we talked about a lot of those, and we did, we mentioned that those sectors were really, gearing up for nice moves. But with the structure of the US dollar, with the amount of money that it does cost to to build new facilities, to find, to source, rare earth minerals, it takes a lot of energy, a lot of funding. So we need to see that those kind of prices can hold. You don't want to be the bag holder because all of these stocks have run a lot. So you just want to be cautious of that. It's not that I'm bearish on those sectors. Obviously, I've said that, if you're holding stocks, you can hold them for years and you're going to do really well. The main thing is just that you're not the last one kind of sitting in some of these stocks that have literally had like 100%, 200%, 300% returns. And you're seeing that even in the space stocks, a lot of them are starting to come off their highs. That's really normal because they've just had massive runs. And if you've been trading them actively, you have made hand over fist in the trades, but you do want to start to be a bit cautious because, mini cap stocks and small cap stocks, when there tends to be volatility in the market, they can, even if they're really good companies, they can have larger than average kind of pullbacks. So you want to be cautious of that, especially because they have had really nice runs. There's not too much to talk about in this coming week. We have a lot of earnings. Some are, I think, again, that some of these stocks have run a lot. So you do want to be cautious. You have HIMS has finally closed their gap. So, they're kind of sitting more at an equilibrium. Palantir's, taken a bit is also still has been running high. Uber is one that has had a nice pullback. So that's one that could, if its earnings are good, it does have a lot of room to move back up to those previous highs. APP, we were in that. That's had like a really nice kind of cautious climb into its earnings, and that can have, if it has positive earnings, that can still have a really nice move. It had a really nice squeeze into its trend line and then gave us a really nice smooth kind of upward move. But one of the problems with APP, I don't like trading it for options. It has an exceedingly wide bid-ask spread, and it has a lot of volatility. So we've just found that even though it's an expensive stock, it is a stock that's better to trade with shares if possible, or with naked positions. So something like Oscar, that also has earnings coming out this week. That has struggled to kind of pop. It continues to kind of just barcode. So unless they highlight something important in their earnings, that's just a company that you want to be trading kind of in its trend line, if in its kind of I call it a price corridor. When you have like a really clear consolidation, you have like a range high and a range low. If you're trading those edges, you'll be fine. But of course, it's always difficult. Would you long-term invest in APP? So I haven't put it out in my Discord as a recommendation, but I've had APP shares for back. But would I be investing at this level? I don't know, actually. It's quite an expensive stock. I think that there are other stocks that have a greater potential for, that ROI. I don't think it's a bad stock to hold, but it's quite expensive. So, just to get to 100 shares so that you could do any kind of selling strategy around it would be like $70,000. So that's the only kind of drawback on that stock. We have some more of the, what do you call it? Healthcare stocks. So the HIMSS, Lilly, NVO, and those stocks have, they did really well, but they've just continued to struggle. And a lot of it has to do with the fact that there's so much unknown about Medicare and Medicaid and, the future of what healthcare looks like in America, what the changes both at the policy level, but then, at another level are expecting. That's, those are difficult stocks to play right now. I mean, we've seen NVO has had a massive pullback. HIMSS was able to get back over its, to fill the gap. Lilly also failed its trend line. So, these are all kind of playing together. So if, one comes out with really positive earnings, that can kind of be a, lifts all boats. But at this point in time, I think policy-wise, a lot of the positive policy that they thought, would support their price action has then turned out not to be so supportive because of the fact that they want to fight, drug prices and just the amount that's being spent in things like Medicare and Medicaid. So, if you're not really good at reading price action, then I would be cautious to play those. I think a lot of people have probably lost money trying to short him and hers and trying to long NVO, and neither of those really were positions working out in their favor. So for APP, it's a great company, but to buy it at this price point, that would be the sticking point for me. So which stocks are you looking at with a great ROI? So, if I'm thinking about what I'm going to own for the next, let's say 3 to 5 years, I do think that the space stocks have a lot of room to run. And one of the things that I like about them, and this is something that I keep telling the people in my Discord, is, the week over week, month over month, these companies are talking about new contracts that they're obtaining, new work that they're doing. They're talking about positive impact of their research, whether that's based with satellites or sonar or whatever it is. They've just, all of these companies have just continued to prove that they're not just a company that exists. It's not just like research and development, but they're actually like consistently doing things that are like taking their product to the next level. So, something like, like we've been really consistent about selling puts on things like Rocket Lab, A Lab, ASTS. Some of those have already now run a lot. I think A Lab and ASTS are like higher costs now than they were a year ago when we were first talking about them. But yeah, a lot of those companies are just, it's not about like what do we think they can do. It's the fact that like they are doing something and they've probably not even tapped into like 5% of their potential. So that's why I like them. And because of the fact that it's a defensive play, right? The United States wants to constantly be ahead of their competitors. So something like being ahead in the space race is really important. So they're going to put funds there or give as many contracts as possible. So I think that those are companies that just they have a good story right now, and I think they'll continue to have a good story. Do you think a pullback is coming? So, as I was saying previously, August is a choppy month, and then usually September tends to be the wrecking ball for the markets. So yeah, no problem. So, what happens actually for a lot of people is that they kind of set up their trades expecting a big downside action in August. It doesn't often come until September. And then, so they end up like just getting chopped up and losing a lot of money trying to like over leverage to catch the big down move. So, yep, keep watching the VIX. That is very, very good advice. So, you want to see where the VIX is going, and you can watch the 1 day VIX, but I think it's like VX1D. I'm not sure the ticker symbol exactly, but if you Google it, you'll find it, and it will actually give you the volatility for 1 day instead of the volatility for 30 days. Because the standard VIX is looking at everything 30 days out. So it's really trying to tell you where those longer duration hedges are being put on and if those are coming in heavier. So obviously we can see that people are putting on hedges, but those hedges aren't for August, those hedges are for September. So using something like a 1 day VIX, I think it's VX1D, that will help you kind of find your how volatility is playing out, and if volatility in the like 1 day 1 week is higher than volatility looking a month out or 6 months out. And then you always want to be looking at VIX futures contracts so that you can kind of feel out if you are in contango or in backwardation. So normally you're in contango, that's where each month the like volatility is a bit higher, and that's just because there's more time for something to happen. It doesn't have to be any like particular thing, it can just be in anything. But when you have very high volatility in a front month, then you end up with backwardation, and then that's when you get kind of awkward pricing in your options contracts. And the main one thing that people always forget is that when you are paying for your options contracts, Vega is the component that you pay the most for, that you can see the least. So if you're not looking for what's happening with volatility, then you can end up significantly overpaying for volatility, and that's usually where people end up losing quite a bit of money on their contracts because they just don't guess what that Vega price is. And you don't have to guess, you can actually see it. Look at your, if you put on, okay, so I know a lot of people use the Bollinger Band, but there's another indicator called Bollinger Band width. And that, so when you look at a Bollinger Band and volatility is like you see the Bollinger Band squeezing, you should expect that there's going to be an expansion because volatility is starting to like build up and you're going to get that big move. So that's when you see the bands kind of open. But if you want to know what your volatility like index is, or like how much it is when you're buying, is look at the Bollinger Band width. And that will tell you, and then you can look over time to see if you're buying high or low volatility for that particular day. So, yep, exactly. Yes, Fed rates. So I think basically, I mean, the jobs report came out, and the fact that there have been so many revisions, I think that we know for sure now that September we're going to get a rate cut. The question is then, do we just get 2 rate cuts or do we get 3 rate cuts in this year? And I think that it'll depend on, where we get to with jobs. If we start to see any kind of rollover into unemployment, or if we just continue to see the job market shrinking. Because the reality is that you have people who, like, there's always people who are leaving jobs, and you're seeing a lot of companies learn to be more productive with their just overall efficiency or with the employees that they already have. So, like Microsoft, their layoffs didn't have anything to do with finance. They just had everything to do with productivity, because they have seen that they're able to be more productive with what they have because of their capacity to utilize AI. And so, in those sections, we're seeing some layoffs. But overall, I think that the biggest issue is that companies kind of know where they're, like, they have those 5-year strategic kind of, strategic guides about where they're going to be over the next 5 years. So they know where they're going to be growing and expanding. And so they can put all of their AI energy into trying to build out those areas as effectively as possible, but also to reduce the number of employees that they require. So as people roll off because of retirement, they aren't under any kind of pressure to to hire the same number of people who are leaving. So we just have to accept that reality that just because the number of jobs being created is dropping, it doesn't mean that unemployment's necessarily going to go up. Because the other thing is that we have no immigration right now, right? There's like no immigrant hires, like nothing. And people who were doing jobs as immigrants many have now left the country, or too scared to work, or have been removed from the country. So there are a lot of moving pieces, which is why I think that it's been really hard for unemployment numbers and unemployment claims and jobs numbers to like accurately reflect all the different aspects of what's happening in the labor market, which is why the Beige Book is such an important report to read, because each Fed region has to report on what's going on individually in their region, and it allows you to see the areas that are struggling the most and which ones have been the most productive. So I do think that anyways, August we won't get a rate cut. September we will see a rate cut. The question is if it'll be 25 or 50 points. If those job reports continue to be horrifying and revised down, then we will definitely see 50 points in September. I don't think that they'll do anything more than that, because that will just be chaotic for markets. That'll freak people out. But then the question is, do we have 2 more rate cuts? And are those rate cuts also going to be 50, or do they do another 50 and then a 25 as they kind of feel out what the tariff impact is going to be on things like inflation. So all of that is going on. I'm trying to make sure. Yeah, so sell call, sell puts, exactly. You want to be selling. Find a way to sell against what you have during this season. That way, any cash you take in, you have that on the side. And then, September, you want to have your puts ready to go so that as you move into the September OPEX, you are like ready for that rolling over. But you can do, you can look back and just look back at the last like 20 years of Septembers and see exactly what dates you see the rollover, what day of the month that is, and then how that is positioned against VIX expiration and OPEX. And then, of course, you have quad witching in September, so you have a lot going on at the same time. But, I can like tell you what all the durations are going to be, but it would make more sense if you go and look for yourself because it'll like stick in your memory better that way. I know you guys come here for me to give you the information, but sometimes it's also good to do a little bit of homework. So look back at your Septembers, check them out. GDP revision might be a big surprise. Yes, but I don't think that we're going to see negative GDP numbers. I just think that it feels like the way we do all of these reports is just not keeping up with the times. And so that I think that the statisticians really struggle because there are just so many more aspects to the market that are just continuing to change and develop and are unique to what the market looked like 10 years ago, 20 years ago, 30 years ago, 40 years ago. Don't think it's the statisticians that are like trying to fail us. I just think that the way the reports were designed, even if they were like updating them every 2 or 3 years, they would still struggle to keep up because just the way that we're working is moving really fast. It's really the only kind of way to say it. The change in life is just happening consistently. CapEx spending and infrastructure, they're getting thinner. Yep. I use Copilot at work and I'm getting 4 times more work done. Yeah, it's funny. My dad will, send me stuff that he's like researched on Copilot, and it's like things that seem really random, but because he can pull together the data so fast, he's just like doing all kinds of amazing things. And I'm like, okay. And my dad's not, I'm almost 44, so my dad's not a child anymore to be, using all of these things. So, he's out here, he's doing his thing, learning. So, yep, the beige book is fire, but most people don't read it, but I love it. Let's see, Ashanze is here. Yep. Everybody wants to be getting those protective puts for get ready for September. Um, all right. What are your thoughts on Lucid and Uber collaboration, specifically movement for Lucid? So to be honest, I was not really following the whole dynamic closely. I was actually trading Uber very, very closely, and we already saw in the gamma levels that we were going to be breaking this level and then having this strong pullback. So hello, sir. Welcome, welcome. I
Ooh,
apologize. I didn't see you come in.
hey,
How are you?
hello.
Can you hear me?
Mhm.
Ah, super.
I had a sunflower seed in my mouth.
Ah, okay.
But yeah, I can hear you.
Super.
You can put these down.
So, what are you looking at, sir?
uh, as
Oh,
far as
first of
what, the
all,
market, stocks?
give us an update about your YouTube channel. How's it going? How are you enjoying it?
Ooh. It's going well. We're live on Tuesdays and Wednesdays. We're building a steady viewership. Right now, we're averaging about 300, 400 views per session,
Nice.
which for me is pretty. To me, that's pretty good because they aren't evergreen videos where
Mm-hmm.
people can go back and rewatch. Like it's pretty much you got to see it live, and then that's
Mm-hmm.
it. Um, but we've been giving out some really good value. A lot of the calls we've made um, have been spot on. Ooh, my nose is itching. uh,
Those,
but no,
you're allergic to those sunflower seeds.
yeah, or I don't know. I think me and my wife, we both seem to be coming down with a cold too. So,
Oh no.
uh, but no, it's all good. So yeah, I mean the show's going really good. People are asking for a third night. We'll see if we can work that in there. But no, really good, really good. How's everything
Well, if
on
they're
your end?
making money with you, of course they want you making
Right.
soon. Soon they'll be like, "Can you trade every day for us?"
Yeah, for sure, for sure. But no, how's everything on your end?
Yeah, we this week we did, we did really, really well. It's always strange. So we had this funny situation. I mean, Thursday for us was we were expecting after that massive move down, we were expecting to have some kind of like end of day kind of rally, not back to, highs,
On
but just
Thursday
back
or
into the
Friday?
range. Yeah, on Thursday,
On Thursday.
to have some kind of move back into the range, not to just close like basically with a flat bottom. So we were a little bit caught off guard about that. And it's funny because when you take, so, a lot of our trades are systematic trades. So we
Yeah.
literally trade exactly the same setup based on the rules every single day. And so it's hilarious because when you've had, um, like, I think we had 42 days of solid wins across the board. But then on Thursday, like our kind of core strategy that we use, I mean, it we took a loss on the trade, and I mean everybody felt so bad, and it was like you and I was like, this is kind of that funny feeling. I said it's like they say that for every insult, you need to have like 30 compliments to kind of even it out. And I was like, I feel like we got our 42 compliments like running up. And then at the end, we get like this big insult. But I was like, you have to keep it all in perspective, right? And then, of course,
Yeah.
Friday, we were back in our vibe and we got our wins. But it always feels like, wait a minute, what did I do? Did I do something wrong? And
No.
it's important to stay humble because you can just yeah you just have to remember that actually even in a set of trades where you have a 95% win rate or whatever, there's always going to be those days
Yeah.
and
I mean,
you
no
have to be ready
strategy is
for them.
100%, right? We all know that. And it
Mhm.
just so happened Thursday was that 5%.
Exactly.
So yeah, no.
So now that we've started to see a bit of a rollover in the markets, is there anything that you are particularly interested in this coming week?
Um, well, I'll say this. I don't think this rollover is going to be over as fast as some people think,
Hmm.
right? Like I just heard you talking about September. Um, so yeah, I've had a thesis that I've been rolling with for a good while, and it's certainly kept me on the right side of the trade. Basically kept me on the right side all the way up until the 6,400 level. And I told my community, I said, hey, once we get to about 6,400, 6,500, I think we can get to maybe 6,450. But at that point, we're really just, we're trying to like squeeze that last little bit out. So I was like,
Hmm.
don't, we may not get there, but it's like, between 64 and 6,500, it's time to start selling into strength and start hedging. That was
Hmm.
exactly what I put in the weekly publication. So um, now I'm on to my thesis where it's pullback time. I mean, I'll just be honest. Like, uh, it's pullback time. I'm kind of in the camp where I think rallies will get sold
Hmm.
until we at least test the 59, 6,000 range.
Hmm.
Um, I would actually really prefer if the market came down to about 57.50.
Ooh, I would like that.
Yeah,
Your mouth to
we
God's ears.
get we get down to about 57.50. What that would be even better. And if the market makers really want to get aggressive, 5,600 is like that drop dead where it's like, okay,
I think I'm
we got here. You
salivating
really
as you
better see
talk.
buyers step in, huh? You better
Said
really
I'm
see buyers step in at
salivating as
5,600.
you talk.
I'm just saying. So those are like my three areas where I think we could potentially see some bases.
Mhm.
If we do the 5,900, that's like a shallow
Mhm.
pullback. 5,700 would be that moderate solid, right? And then,
Mhm.
like I said, 5,600 is drop dead where you better see buyers step in there because if not, we're
Mhm.
going we're gonna have bigger troubles. As far as what I'm looking at, uh, number one on my list is Palo Alto. I'll just come out and say it.
Mhm.
In the beginning of the year, my top two were Robinhood or Hood and AMD. They both have done pretty well.
Mhm.
I was always searching for who was going to be three, four, and five because I like to have a top five. I really didn't have too many names, but what I would say is this acquisition by Palo Alto of CyberArk,
Mhm.
um, it topped the cake for me because CyberArk and Palo Alto were the two cyber companies that I was really looking to get into. And so now
Mhm.
that
Yeah.
they're buying them, I'm like, oh, I get a 2-for-1 special right here.
Mhm.
Uh, so yeah, Palo Alto is number one on my list during this pullback. So once this thing is kind of done and
Mhm.
everything settles out, that's the first place I'm looking to dive in is Palo Alto for sure.
Yeah, we've done, Palo Alto did everything for us. That was one of our massive plays because with AVGO and NVIDIA, like about maybe a month, 3 weeks ago, a month ago, we kind of started hitting all of our key targets, and then it was like, okay, if you want to keep playing for this last like bit, we had tons of shares of SOXL. We got
Mm,
that like when it was down in the dumps because we got tapped in on some short shares and then short puts and some people that didn't get tapped in. Just we said just buy the shares because
yeah,
that'll do well overall, and then you're not trying to pick which one is going to squeeze a little bit higher. But Pan W, we had like a little bit more conviction on, and we stayed in that all the way up to this like 200 something. So that was a really, really nice play for us. Our diagonal spreads did quite phenomenally well. But yeah, this pullback here, the break of the trend line, is setting us up to be able to reposition ourselves. Because I don't want to be like buying everything at the tops. It's like you're just, it's
right. You're
like
just
that
trying to
last
you're
bit
trying to
of
get that last little
toothpaste, and
dime
it's.
out. It's like you really want to wait for the risk reward to be a lot better. You know,
Mhm.
so yeah,
And then
but
somebody mentioned Apple. Apple showed me something. I was a bit shocked, if I'm honest.
I mean, Apple's earnings was really good, but they just are the price is not being the stock's not being rewarded. Mainly because I think it's well known. Everybody wants to see like what are y'all gonna do with AI, right? Until they really come out with a definitive AI strategy, we we actually can see Apple continue to lag, which is kind of disappointing because you know I thought they would do better by now, but um, yeah, until they get this AI strategy out, it's looking it's looking like a sad story. Not to say, listen, when they do boom, it will be like a rocket ship. It will be all cheer for Apple again. But right now, it's very clear that the market is like, hey, we need to see more
Hmm.
from you guys as far as it comes to just your AI strategy. I think that's what the market is kind of waiting on when it comes
Yeah.
to Apple. So I
I
mean,
think
but they
that
had stellar results. Don't get me wrong.
but they, to be a mega cap, to be at like shoulder to shoulder with NVIDIA and, Meta and Microsoft, they need to start outperforming again. They need to be
Gotta
at
do something.
the edge of something. And it's not that I don't think that they have enough money to do the R&D to do it, which is what's
Or
kind
just
of
buy somebody. Yeah, I mean, like, come on now. Like, it is, I mean, and that was one of the things Tim Cook said on the call, was that they are open to, acquisitions. And he was like, hey, we have done some acquisitions. They've been a lot smaller. They haven't been big in nature. But it's like, all right, now, like, if y'all need to, just buy somebody. I mean,
hmm
there's rumors of them person maybe buying or looking at buying Perplexity.
hmm
Um, but yeah,
And that I thought actually they would have already finished that months ago, to be honest,
yeah,
because
something.
the
I mean,
rumors
yeah,
have been out there for a really long time, and it feels like, okay, this is really long for a rumor to not be a sell the news kind of
yeah,
situation.
yeah. So I mean, we'll see. And for those that's watching, man, listen, we gotta run. We have to address something that we talked about. So ASML, I was really big on ASML. I'm still big on ASML, but again, it's one of those situations where all right, let's just put it out there. The CEO, you cannot come out and say what he said. Like, you don't know if you're going to have any growth in 2026. That was a big bummer.
hmm
And as you see now, a lot of that took a lot of the short term momentum out of the stock. And so it could continue to lag a little bit until uh, that gets cleared up. I would have thought once the EU deal was kind of reached, maybe that would have
hmm
helped. I think it does help because we do have clarity that, hey, semiconductors are exempt.
hmm
So maybe next earnings he'll come out and kind of clean that up. But if the market is just an overall risk off sentiment, it's not going to help ASML at all. And but yeah, I mean, I still think they're going to be fine. They have a monopoly on this, on the
The
machines that
growth.
they make and what they're needed for the AI thing. So again, ASML will be fine. It's
hmm
just right now it's gonna have to go through some short-term
Yeah.
turbulence, and a
The
lot of
other
the
thing is,
short-term momentum got knocked out of the stock when the CEO said, "Hey, I don't know if we're going to see growth in 2000." Now, here's his exact words: "We're still planning for growth, but we cannot confirm it."
mhm.
And that right there just took the wind out of the sails.
The one of the other things I'm surprised that ASML didn't do a stock split when LRCX and Qualcomm did theirs because it remained at such a high price stock compared to all the other ones that I think
Yeah,
just getting that general retail kind of investment energy behind it is just much more difficult. Even for buying and selling options, its
yeah,
bid-ask spread is extremely wide. It has
yeah,
very low liquidity. It is very difficult to position on compared to the others because of the fact that it's such an expensive stock. And I think that that's part of why it never gets those short squeezes like that you could see with other stocks.
yeah.
And even with like short interest, it doesn't have that much short
Not really
interest.
there
So,
yet.
I mean, it's a very difficult stock to play. It's a company kind of like an Apple where you just have to have true buyers who believe in it and are
Agreed.
buying up the stock. And I think that's one of the things that they struggle with. So,
Yeah.
um, CEO's response is like Jeff Bezos's playbook. Yep, that's about right. Um, yeah, exactly. The low liquidity. There are just some stocks that are really difficult to trade unless you're just buying shares because they
Yeah.
have like too many kind of poor aspects of their positioning to be able to really benefit from just the price action, sadly. So so this week we have Hims, NBO, and Lily all reporting. How you feeling about that?
Um.
And we
So
have a
yeah, I
busy
mean,
chat going on, so people in the chat, tell us what you think as well.
yeah. Uh. Yeah, we have a very packed calendar this week. Um, as far as those three names, you said Hims, Lily.
NVO and
Yeah.
Lily.
Well, no, didn't NVO? I think NVO actually didn't. I think they reported a
They
little bit early.
they reported something early. It wasn't their official
Oh, so it
earnings
wasn't their
report.
official earnings. It was something
No,
else.
it
Okay.
was, but they were getting ahead of, I think it was like
Because I know
the
that I know NVO is on a nasty downtrend.
yep,
It's on a nasty downtrend. I'm looking at the chart right now. Last week it was down 32%. So,
yep. Yeah, that's
damn.
why
I thought it
Hims
was because of.
also
I thought it
had
was.
that fall because it
I'm
was
sorry. What
something
was that?
about like they were talking about how other companies how their results are their earnings may be like their forward guidance may be poor because um, other companies are starting to compete with compounding. And so they
Hmm.
were kind of indirectly talking about Hims basically breaching um, their kind of
Yeah.
formula or something. So,
Yeah. I mean, as far as those three names, yeah, I'm not too high on NVO. Hims has kind of been the the one this year that has really been moving.
mhm,
I mean, technically, looking at the chart, it's pretty close to its all-time like closing highs.
mhm,
So that may be one to watch. I mean, we all know like Lily is that's the top player
mhm.
for sure.
But their price action is,
It's I'll say this, I can't say it's quite terrible, but it's just it's just super. It's been range bound. Let's just put it that way.
mhm,
It has been very range bound. It has been making a series of lower highs, but it's not quite making lower lows. That's the thing, right?
mhm,
Like every time it gets to around 700, 730 ish, it like it holds that.
mhm.
But yeah,
Buyers come in.
it can't seem to reclaim like back. Like it gets above 800 and then it comes right back. Like so, it's very
Yep,
stuck. Lately, I think some of the holdup when it comes to the pharma stocks is Trump keeps floating that he's supposed to be announcing those pharma tariffs soon. So that seems to have pharma stocks in a headlock.
yep,
Until we can, hear what that's going to be, I think that will continue to be in a headlock.
yep.
Um,
That's what
so
I
I don't
said
know, but I
earlier
did
as
see.
well.
Go ahead. I'm sorry.
So
What was that?
I said that's what I said earlier. So it's good that we agree.
Yeah, like it's one of those ones where it's just like I'll just wait and see, how that goes.
Hmm.
Once those names finally get to the point where they can turn around, I think a lot of healthcare stocks do are offering tremendous value right now. Like I can see people are going crazy in the comments about, like United Health, which is just continuously gets hammered. Um,
Hmm.
so yeah, we'll see. I saw Derek, mention Palantir is first up this week or Monday.
Hmm.
That'll be interesting. I think it's two sides to Palantir, right? You got the like cult believers, hey, they're super AI and they're like killing the game. And then you have like the valuation folks who are like, it's what is it, 700-800 times PE or something like that. Like
Hmm.
it's crazy. Like the valuation is super dumb on it.
Hmm.
And it's kind of like, you got those two camps kind of battling. So we'll see what Palantir does. Listen, my whole thing is this entire earnings season, the theme I personally have been seeing is that it has been better than expected. At the same time, it's been a lot of sell the news, which
Hmm.
I'm not too surprised because I mean some of these stocks have had crazy runs off those April
Hmm.
lows. So I mean I can see why you're getting some profit taken at this point in time. We're going into a part of the season where things slow up a little bit. So,
Hmm.
while the results have been good, we just haven't really been seeing too many good reactions. It's been a lot of soda news. So, I was looking at the calendar a little bit earlier, and I was telling folks, I said, I actually digged in. I'm like, man, this is another packed week.
Yeah.
Um,
And in a
it's a
way, it's
lot
almost
of names.
more busy than last week because last week you had, because the mega caps like outshine everything else. But this week you just have a huge amount of solid companies that you would normally be trading.
Yeah,
Like
yeah,
I mean,
and
even me,
it's
I'm like,
like
man,
in industry wise, it's very broad too. I mean, you get a little bit of
hmm
healthcare, you get a little bit of like tech, you get in. I think
energy.
there's some, there's a good amount of like industrials that are reporting.
hmm
Like I'm looking at the, just the earnings whisper calendar, and I'm like, I mean, every
That's exactly what
day,
I'm looking at right here.
I'm like, you got. I mean, you have BWXT, that's a nuclear player. You got CAT, you have Duke Energy, you're going to
hmm
see Eaton, you're going to see AMD, SMCI, ANET, ALab. I mean, you got McDonald's, Uber, Shopify. A name that I keep seeing being brought up time and time again is the Oscar, the healthcare company,
hmm
right? Like they report this week.
Yeah,
You
because
got Disney.
they're I think one of their like the CEO or somebody really high up in their executive suite is related to Trump, like by
Oh,
marriage.
and
It's
for
like
Oscar?
yeah, it's like
Oh, okay.
the son-in-law or something like that. So that's why a lot of people think that there's going to be some kind of support for that
Ah,
company. It's
okay.
basically the nepotism play.
Yeah, probably. I mean, so many. Like you said, Lilly, Celsius,
It's
VST.
Constellation Energy reporting this week.
No, he was saying Duke Energy reports.
Okay, because I was like, I don't think that Constellation Energy
Nah.
reports until next week.
You got. I mean, we got. Square. Even I think Tempest AI on Friday.
Hmm
I mean, it is a busy week on the earnings front for sure. And being that it's a really light economic week, um, yeah, it's gonna be interesting to see like how what this week does.
hmm
I really don't
I mean,
have.
it's funny because I'm like, when we were preparing for this coming week, I was like, we're already in so many trades that are have earnings this week that I'm like, oh my gosh, you know, now we have to think about do we take profits on so many positions that we have, or do we, wait them out? But
Yeah,
I think that
yeah,
just it's the overall, for me, it's the overall combination of of just the weakness in the overall market, the fact that, it seems that now everybody's starting to come to terms with the fact that, um, tariffs are like, tariffs weren't the big explosion that everybody was expecting, but at the same time, is it a lagging situation and the real results are going to be coming? And you just have this
I think
kind
it
of
is.
like nervousness that just feels like it's baked into the air because the VIX was just so depressed for so long that that now I think that you're starting to see Trump kind of come out. Just also, I think that, this last week we had this sudden surprise of the US being really harsh on Russia, which no one seemed to be expecting. But I think that was definitely part of the EU negotiations that they would start to pay more in certain areas, and um, kind of Trump was going to have to be harder on Russia. And I think that that kind of freaked people out. And, you know, they think that there's a lot going on. And then you have the seasonality. I don't know.
Yeah, yeah. All I can, here's something that I will say that this is what I'm starting to question. I see a lot of overconfidence. There's a lot of overconfidence. Um, I think, because we had such a vicious rap, rally off of the lows. I think dip buyers are really feeling themselves because they've been proven right time after time and time again.
Mm-hmm.
Um, for me, I just follow my signals. Uh, and for me, a lot of my signals are rolling over. Hold on one second.
Mm-hmm.
Um, yeah, a lot of my technical signals are rolling over. And then for me, that just get out the way. Um, is what that's like what I'm doing. Uh, yeah, like there's a lot of overconfidence.
Mm-hmm.
I seen it in the comments. Derek said, the taco trade, nobody's scared. I seen it's a lot of the taco is getting overconfident, right?
Mm-hmm.
Like the tariffs are implemented there. I mean, with the exception of maybe the extension on China. And personally, I kind of starting to think the China thing is baked in. I mean, how many times are you going to say, yeah, we got a framework with China? I mean, you're going like, I thought that deal was done, right?
Mm-hmm.
So the fact that,
Yes.
people keep saying, oh, if you get a deal with China, the deal was done. Or at least the framework was done. They keep saying it's done, right?
Mm-hmm.
Or then they do a 90-day extension. So there's a lot of overconfidence in the market
Mm-hmm.
right now, and I think that is a red flag.
Mm-hmm.
If I'm my personal opinion, that's a red flag.
Mm-hmm.
Um, and I think the yeah, there's an excessive amount of overconfidence. I think there's a lot of okay. I'm not sure if you addressed this, but something glaring for me that I've been thinking about all weekend is how bad or that job revision that was terrible in my
Mm-hmm.
opinion. Um, I'm not gonna get into the whole firing thing, but somebody needs to be held accountable because to have these type of consistent
Mm-hmm.
job revisions. Like it's not just one-offs. This is not the first time we've seen a big job revision. I want to say towards the end of last year they revised down by like 800,000 jobs. And then now if you go look at what they did for May and June, I mean you're talking about 14,000 for May and then 14,000 for June. So those 100,000 numbers, those 100,000 job numbers we got, that's bad. I mean, you however your data collection method is, y'all need to go fix that or something.
Yep.
Like somebody got it. Like
That's
that's
exactly
why
what I
when
said.
when the commissioner got fired, I kind of was like somebody was gonna lose their job. Like that is bad. That is grossly mismanaged there. Like your data sources are terrible. You need to get that together. Somebody got to be held accountable. Now
Mm-hmm.
the way he did it, okay, you people may not agree with it, but that is bad. You go to a
Yeah.
private sector or somewhere and you got data that bad, you on a project, somebody getting in trouble. Somebody's getting fired for that, for
Yeah.
sure. So, but back to the main thing of it is now is what everybody has been saying. If you are on the ground level, a lot of people are saying, hey, the job market ain't this how is this how are these numbers aligning here? How is unemployment only this and how are we creating these jobs but it's so hard to get a job? Like it just
Mm-hmm.
wasn't matching up with reality. And so now that we're seeing those job revisions, it's kind of like, oh, okay, maybe the job market isn't as
Mm-hmm.
cracked up to be what it was. Um, and now
But
that you've seen those revisions, people are like, well, damn, the Fed should have cut.
yeah.
Yeah, they
But
should have.
I'm sure that Powell knew those numbers because in a previous one of his um, rep- um, it was like
FOMCs.
they said that they were going to hold because something relating to PCE. Then PCE came out the next day and it was like not what people expected. But he had kind of inferred that if things are falling outside of like our expected range, we're usually given some kind of like early feedback. So he must have known that this that that the way they were collecting the data wasn't quite right. And I'm sure the Fed has their own way of collecting data from their own regional offices about such things. So I don't think he was surprised, but I think that obviously for the public, it's such a confidence breaker because they are such an important bureau to then just to have those consistent revisions. And I was mentioning it earlier that the problem with statisticians is that even every time you make minor incremental changes, you have to have so much time with that data set that to know if those incremental changes were correct or not. And it's like shifting a Titanic. You just can't, and I think that that's part of the problem. But now that technology has moved so far forward, you would think that they would be able to correct some of those things because, yeah, otherwise you're constantly doing strange revisions that that cause people to lose confidence in all of the other reporting that you've been doing, which may have been done well, but because of the changing work environment, isn't keeping up. But
Mhm.
I agree. The revisions were very shocking, and the market was punished for that.
Yeah, yeah. And now going forward, it's going to be even more compromised, right? Because
Hmm.
now the other side of the coin is okay. Well, Trump fired the commissioner because he didn't agree. So what's the next report going to look like? Is it now going to be um, what's it going to look like? And uh, is that is the new commissioner or is that change going to be more favorable for Trump? You know what I mean?
Hmm.
So now, beforehand the numbers were already questionable, but now they're going to be even more questionable because now
Hmm.
Trump has made it a political thing. Uh, by saying, "Oh, the person was a Biden appointee." He's always got to throw his politics part in it. So
Hmm.
now those numbers are just going to be even more questionable. I mean, they were already
Hmm.
questionable as is. Now they're going to be even more questionable because it's going to be a matter of, well, is this person manipulating the numbers to make Trump look good, right? Because his whole thing was, well, they're manipulating the numbers to make me look bad.
Yep. And now
So
you have
it's like,
Krugler that has resigned from the Fed, so he'll be able to appoint another dovish Fed member.
oh,
And then
because somebody resigned. Yeah,
yeah,
yeah.
and that's a very strange situation because at the FOMC meeting, she didn't show up, and it's not been made public as to why
Oh,
she
so
never
she's the
came.
one that didn't show up.
Yeah, and then she
Whew, boy, that
resigned.
listen, that Fed thing, they having some issues. You got somebody resigning, you got two dissenters. That was
Yep.
like the first time that's happened since '93.
So the politics are doing something somewhere.
Uh,
And then, so, I think that, and then I don't think even if like Powell's supposed to stay as a voting member even after he comes off as the
did you see that
president,
question though?
but I think that's not going to happen.
Yeah, they asked him about that. I mean,
Yeah.
he's like, I have no comments. He was pissed, man.
And he left. He just
Well,
walked off.
so okay, talking about the FOMC, what a hawkish FOMC it was, right?
Hmm.
I didn't really get to see all of this. I had to watch some of the playbook, but I mean, this guy literally was like, "Y'all are lucky I ain't raising rates." I
I
said,
don't think
"Oh,"
he was.
I said, "Hey, Trump pissed him off." So I was just, yeah, I don't, look, things are getting really weird. um,
That's a that's a
Yeah,
good
like,
way
well,
to
we
put
kind
it.
of
Weird.
knew, right? We kind of knew. But I mean, this guy Trump, he's just put his fingerprint on everything,
Hmm.
and we just, we have to work around it. We have to work around it. Um,
Well, the thing is, I mean, I think that this is exactly what happened with the judges, right? That
yeah,
they just like slammed in their judges at every level possible. And
Mhm.
now they're doing the same thing with the FOMC members.
Mhm.
And the thing, though, that I think is probably going to be most shocking to the American public is that, all the MAGA talk of like, um, getting control of the debt and this and that. Um, they basically lost that conversation entirely. And Trump is really going to do whatever he wants to do. And now, if he has control of the FOMC, which, I think that by next year he'll have very significant influence in the FOMC, then we're going to start seeing money printing again. We're going to start to see rates down. And it's funny because a lot of people who think that rates coming down is going to save them from something, they don't realize like prices go up really fast. Like right now, I mean, like housing prices, there's a pressure for housing prices to come down because people can't sell to anyone because interest rates are so high. The minute interest rates starts to come down significantly, those housing prices are just going to go up because people will be able to borrow money again and they'll lock themselves in to really low rates, but for houses that they genuinely can't afford at those prices. And it's almost like if if people could, they should buy their house now while the rates are high because they can
And refinance.
refinance when the rates come down. And then
Mhm.
they've locked in the value, the price of their house at a much lower rate. Um, and then they're not paying all that extra money in interest. But what
Yeah.
do I know?
I mean, what you're really getting at is really what is the root cause or root issue of all this stuff, which is money printing, right? Um, we talk about prices increasing and stuff like that, but I think what's not talked about enough is the reason prices are increasing the way they are or the way they will accelerate is because you have more money in the system.
Hmm.
So really, it is a true reflection of how how much less the dollar is worth, right? Like the dollar really ain't worth nothing. And when you
Hmm.
keep printing more and more and more, prices go up because you got more dollars in the system. I mean, look, we're getting to a point where the United States is towing the line of hyperinflation. You look at countries like Venezuela and all those type of places where the dollar really ain't worth nothing. That's because the government printed so much money,
Hmm.
right? And America is in that space where, look, I've had a conversation with ChatGPT and I made it as black and white for people and I posted it and really got no response. But it was basically a conversation where I said, hey, look, act as if the government is a person and break down their budget and what does it really look like. And it basically did the math and it said, hey, between uh, the top four categories between the military, the Social Security, Medicare system, and interest on their debt, that accounts for like 80% of the government's budget. So they say, hey, if the government made 100,000 a year, their bills and stuff is 120. And the only way they can cover it is by continuing to borrow. We are
Hmm.
in this country is in a spot where the and I have had back and forth with a few people about this. And I feel like the only true solution to really getting out of this problem is you have to raise taxes, meaning you got to make more money, and at the same time you have to cut spending. And you got to cut it where it matters, meaning you need to cut defense, you need to cut the Medicare stuff, you need to cut Social Security because those are the major categories where spending is the most. They always focus on areas that, to be frank, it is literally like when I work with an individual on their budget, it's like telling them stop going to Starbucks and that's gonna make a difference. When knowing the house they rent is too much, knowing they car payments is too much, know they
Hmm.
spending way too much on eating out and not grocery shopping. if you really want that person to make a difference in their saving habits, bro, you need to downsize. You need to cut that car note, and you need to stop eating out, because that's what's going to really make a difference
Hmm.
in your budget.
Hmm.
You stopping your little $2, $3 Starbucks coffees ain't really going to make a dent.
Hmm.
That's exactly the space we are in with this government. By keep cutting the education budget and all this little small stuff, it sounds good, but it ain't really making a difference.
Yeah.
Like, it's not gonna really make
But
a
the big
difference until
beautiful
you
bill
cut
like
the big
expanded.
areas. Huh?
Yeah, but that big beautiful bill expanded so many
Yeah,
things that
you
I don't
know,
know
and
how they're gonna get there. Because the problem is that once you've done a tax cut or you've like baked in benefits, it's impossible. It's very difficult. It is so unpopular to get those things ripped out. And Trump knew that when he
yeah,
said, "Oh, my Trump taxes are only going to be for 4 years and it'll just give people like a break." But the thing is that now you just can't roll them off because people are expecting them. And and so and then you go and you expand something like the defense spending. It is crazy. Um,
yeah. I
so
mean, and look, I know people say you need to tax the rich more. Listen, taxes have to go up on everybody. As much as I hate to say it, like, everybody is going to have to do their fair share. Corporations, the rich, it just, you got to think about it. Think about, if the government was a person, you need to tell somebody, yo, you need to make more money, period. Now, when you think
mhm,
about what is the government's way of making money, they tax their people. So that means you need to tax your people more to make more money. And like you said, it's not a popular thing to say, but ultimately, that is, in my opinion, the real solution. I mean,
yeah.
it is what it is. Like, I'm sorry, I don't want to be taxed more, but at the same time, I understand, if you want to get out of this issue, that's just what it's gonna have to be. So
Wow, it
yeah,
looks like it's thundering
yes.
and lightning out here.
Yeah, I was saying, y'all having that, what
It's
is it,
like
that dry lightning? It's
I'm
like
just
flashing
so
lightning.
magnanimous. I'm so magnificent. I make the no, it does, but it does look like that, in fact. But
Yeah.
we'll see if it. But usually it doesn't rain. It doesn't. No, that's really some thunder going on
It's
behind me.
looking, yeah. Are y'all
But
supposed to get rain or something?
you know, the, because of the positioning of Montenegro, when we get rain, it's like super aggressive for like 5 minutes and then it just totally stops.
So it's kind of like Florida.
So, but I think my car windows are open. So
Uh
just 1 second.
oh. All right, let me read these comments for a second. Uh, let's see, Zay, you can go do the GoFundMe for funding the government debt. Yeah, like, the government has a GoFundMe. uh, let's see. Yeah, let them tax the rich if they will. I was shocked Trump raised the BBB. Yeah, I mean, you got to tax the rich. You got to tax everybody. Um, nobody's talking about the destruction of the farmers markets when the get rid of the 2008. Are you good? Windows up?
No, my
Your kids got it?
my nephew was just outside and I was like trying to get him to run up to the car, but
Oh, yeah.
I think it's already raining, so
Oh, it's already raining? Oh,
as I
no.
went outside. It's okay. We won't die. It's so hot here. The car will
You
dry
sure?
out in 3 seconds anyways.
Okay. All right. So what else is on your agenda for this week? I mean, it's about to be a pretty light week. I mean, you got light macro, you got heavy earnings though. Light macro, heavy earnings.
Yep. That was the big thing that for me, I was like, I think that now we're going to see what the market is doing. The market is
Oh, there they go.
mm, الشبابيك السيارة. شكرا. There's my nephew. He came
Uh,
back to save me.
did he?
Um,
Oh, he gonna go put your windows up?
yeah.
Yeah.
So uh, what do you call it? So I think that, now the economy is going to show us what the economy is actually doing because of the fact that we're not going to be like, jerked around with so much macro stuff. We're going to like feel what is actually going on with the real like economics and with the individual companies. And I do think that, everybody has to be aware of the fact that like we've had like a really like a 3 month kind of really nice trend line run up. Things are starting to break their trend lines. Things are starting to do a lot of
Oh.
consolidation. You're starting to get triple tops, rounded
Mhm,
tops. You're
mhm,
starting
mhm.
to get a lot of just like price action that looks like, you're going to come down into some areas because the truth is we've just left all these zones riding all the way up and we haven't like come back to kind of clean up anything, mitigate anything. So, the natural price action is that you're going to come and try and clean things out. So you want to be a bit this is where, you want to be a bit cautious. I don't know if the aggressive fall apart happens in August, because normally that's in September, and that's when, all the volatility has basically come out of the market and things start to stall. But last year, oh, I heard somebody calling. Last year we had everybody was expecting a massive drop in September, and then we never even got it. So I think that
Mhm.
a lot of these seasonal patterns have started to, like a lot of the seasonal patterns have it started to change a little bit. Sometimes they're pulled a bit forward because people are trying to like front run them. So that's to me the only kind of question mark is that,
Yeah.
if a lot of people get freaked out and they're already expecting a massive drop in September, do they just start exiting their positions now? And then I feel bad for all of those money managers that weren't in this like massive run up because now they're trying to like squeeze out like this last, potential push up. But
Mhm.
yeah, I think that, I keep telling people, we trade gamma for a reason.
Woo, that lightning is getting real.
Did you hear
Yeah,
it?
I saw that. Eee. Look like some
Um,
fireworks back there.
Well, they do fireworks when people are born and when people die. So oftentimes I'm like, what's going on? And then it's just
Oh wow.
fireworks. But
Okay.
no, this is not fireworks. This is
No, that
like
ain't fireworks.
Jesus is talking to us.
Yeah.
This is
Yeah.
like your repent and be saved moment. Come on, friends, get out your Bibles.
Yeah.
No,
Yeah. No,
I
truly.
think that, so I keep telling people we're still looking at gamma,
Hmm.
and that's what's giving us our price targets. But we are being very cautious because, with even like with Google, we had a clean price target, but Google hit that level before, in the post market and by the pre-market, had already given some of that back, which was disappointing. Um, so we're trying to play it where we're like really cautious and playing each step at a time. Whereas like 2, 3 months ago, we could really like position ourselves with like for a really strong push up. I'm not doing any of that anymore. Our
Yeah.
positions are much more modest time wise. And we are, like already in the group, people are like, does this look like a good hedge? Does that look like a good hedge? What do you think about this? So people are already starting to think about how to hedge their overall portfolios. And I think that
Yeah.
that's a
I mean, I
healthy
think we're
way to
due for
think
a little
about
bit of
markets.
I think we're due for a little bit of mean reversion. Like you said, I mean, you guys, I mean, the market itself did a 30 some odd percent run off of the April lows. And then when you start to look at individual stocks, I mean, you got some stocks that have done 100 and 100. You got stocks that have done 100 to 200% gains off of those April lows, right? And when you think about it, that's 100 to 200% in 3 months.
Hmm.
So I think we're due for some mean reversion. I think one of the things you had mentioned that is a good signal for people is when you've been winning consistently, like you said, you guys have been winning, racking them up over these next couple months, and you have, and especially for your instance where you guys are have the same systematic trade that you're running over and over again. Once you see the things that you were doing stop working, you
Hmm.
know something has changed in the marketplace. Because if it was still going at the same tune, you'd still be winning. But once you see that not your strategy was specific, but
Hmm.
whatever a person has been doing, if they've been winning, and now they see like it's not working as it was, that is a signal to you that something in the marketplace has changed, right?
Hmm.
Um, you mentioned Gamma. I was going to ask you, what are you seeing from Gamma? Because the way I use Gamma, and I've been putting it into my Chat GPT, it now is telling me that we are kind of have rolled over to net short gamma territory.
Hmm.
So, like again, another change in the
Yep.
market behavior that for a good minute we was operating in that positive area,
Yep,
but
yep. That's it.
now
And we've
I'm
been like
getting
on the cusp of that for a really long time where it looks like, oh, we're dipping down and then we get right back into that positive area. But you're right. Like this Thursday, we just started to see all the gamma kind of start heating up
okay.
on the downside. And so, yeah, that's
Okay,
exactly right.
yeah, because I agree. From what I'm seeing, and like we said, it's. Here's another thing that I agree with you on with is I'm personally not in there. Like there's some people in the camp that are like dumb bears, like, oh, the top is in, it's over, we're about to crash. I don't see that, right? I think
Hmm.
this is just a healthy mean reversion after a hell of a run. Now, what
Hmm.
I will say is this mean reversion can be anywhere from at minimum 5% to a max of 10 to 12, right?
Hmm.
And that might be painful to those folks who started chasing, or those folks who are trying to
Hmm.
squeeze every little bit out. You're gonna get
Yep.
caught holding that bag, and so to you it's gonna be, it's gonna feel a little painful. But you know to those who have managed their risks well, or got in at those lows that have a really really big buffer, they'll be able they'll be able to handle this, right?
Yep.
Like you said, I do think that this August and September will be tricky, right?
Hmm.
I think like you said, we'll see some mean reversion. We might see some consolidation, mean reversion. Ultimately, I do think it will lead to that buying opportunity that leads into the Q4 comeback.
Hmm.
That I think the market will have. But we're just in that period of the market where things seasonally get slow. Like earnings
Hmm.
season is going to be over, so you're not going to have that catalyst once you get into the end of August, going into early September. It's going to be very macroeconomically driven, and if
Hmm.
you've been paying attention to how that's shaping up, it's not going to be very positive. I mean, you got
Hmm.
jobs jobs revision, between the jobs number and jobs revision, that's looking kind of bad. The market's kind of been ignoring, but inflation has been slowly creeping back up. So what do you think is going to happen when we get into August to September, and you get some inflation data that's been going up, right? Um, that's another thing that oh, I think she froze on me. But that's going to be another thing that ultimately may not be as positive, is inflation numbers kind of start creeping up. um, we'll be having to deal with, is the Fed going to cut in September or not?